In the meantime, we're keeping our eye on tech stocks after yesterday's big sell-off. NASDAQ in the red again today after dropping 1.2% yesterday, worst day since mid-August. Shares of Twitter and Facebook are falling on the heels of Jack Dorsey and Sheryl Sandberg's testimony in front of Congress yesterday. Mike Santoli joining us at Post 9 with more on the stock moves and what they say about the overall market, whether it can hold up despite tech cratering here.
Yeah, so the leadership group of the market has kind of wobbled a little bit here, Sarah. It's unclear if it's just a matter of, look, this was an overcrowded trade. Everybody was fully weighted in tech, and now it's a little bit tired, and we've had another one of these pullbacks, or if it's something worse than that. So what's unclear, look at the different angles you can look at tech at through the different ETFs. The broad S&P tech sector ETF, XLK, you definitely see it kind of surrendering a little bit of that leadership role. It's rolled over a bit, but that uptrend is still intact. This is up 16% year to date or so, but down 2.2% from its high. So it's further off its high than the broad market. Then turning to a FANG-like ETF, FDN. This is the Dow Jones First Trust Internet ETF. It really does act a lot like those big FANG stocks. This is further off of its high, 4.5%, but up 28% year to date. So the pattern is clear. If you're up more than the market, a lot more, you're down more from your high. Finally, semiconductors, they've really kind of taken a little bit of a back seat in the last few weeks, up 12% year to date, the SOXX, but still you can see that high is way back in the spring, and that's down 4.5% or so from its peak. Finally, I did want to highlight the equal weighted tech ETF. That's RYT, because this sort of strips away the dominance of Apple and Amazon and of the huge cap techs. It's actually the better looking chart here. It seems like the average tech stock is holding up okay, down less than 2% from its high, up 17%. So it's not as matter of a flight away from tech, but some of those glamour stocks, the overheated bellwethers. By the way, not a lot of people talking about the fact that Amazon is down $65 in less than 48 hours from the moment it kissed $1 trillion market cap, down 3%, not a big deal in the grand scheme. But clearly, the question is it good that the market is differentiating among the winners and losers and FANG is not one monolithic thing? Or does that mean that the lead horses of the market are starting to get a little bit too tired? That's
the answer is
Apple's still holding in there, and I think it's probably somewhere in between. What I don't think is likely is that the market has this kind of immaculate rotation away from big cap tech into other stuff and just kind of keeps going higher without losing stride. I think that more likely you're going to get some kind of more correction in the market that causes a rotation in leadership. But I still think tech maintains the benefit of the doubt because we've had these switchbacks before.
Well, the story this year has been every time it seems as though there's going to be momentum behind this change, then it reverses, and of course tech is higher.
Right, exactly. And something happens, even if it's growth overseas concerns people, well, then all of a sudden you find yourself hiding in defensive big cap tech. So it's unclear exactly whether we've gotten some moment of truth here.
Or what the fundamental reason is for the sell-off. Exactly.
Well, again, just being overheated, but also, look, those hearings yesterday, if nothing else you can take away from it, that the leadership of Facebook and Twitter have very little incentive to show blowout financial performance in the next couple of quarters, right? Exactly. And so that's the takeaway, I think.